Hi, I'm Sarah Perkins with Navi Title, and here's this week's market update. All eyes are on the economy, as always, and the Fed met last week and they did raise interest rates by about 25 basis points, and we also had a new jobs report come out last week for the month of April, and it did go up more than expected. We've had many months in a row of greater than expected job growth, and that is putting pressure on the Fed as they are still trying to tame and bring down that inflation rate. And it's a little tricky right now because we know we have the banks that we're dealing with, as well as the hot job market, and so we're having to deal with what are we going to do with inflation. I don't know, but right now what's hanging out is our interest rates at 6.5%. So they have not moved on any of this news yet. We don't know if it will, but we've been hanging out right around 6.5% for about 6 weeks. And so that is creating stability in our marketplace, and that is giving buyers more confidence. So we do have more buyers than we have sellers in just about every market across the country. So that is pushing prices up. Another hot topic in the news lately has been the mortgage interest rate costs have gone up for people with higher credit scores. Now that is something that a lot of people are really unhappy about, and it is pushing a lot of conversation all the way up to the federal government, and there's a lot of lobbyists in Washington talking about what that means for today's consumers. And the thing is it's only about a $1,500 increase for maybe the life of the loan, and these costs have already been baked in, say since about mid-March. So even though it was officially implemented at the beginning of May, these costs are already built in, and they may come down if some changes happen. We just don't know yet. At this point, we're just watching and waiting to see what happens next.